Welcome back, students. Okay, we're still in the same topic, income from house property. Last video we've talked about how to find out the net annual value in case of a self-occupied house. We will continue with the same topic and we will be doing certain comprehensive problems. Before we go on to the problems, we will look into the important points that we have to keep in mind while solving income from house property problems. These are the important points. The interest on housing loan is allowed as deduction on accrual basis. From the last video, we've learned that under section 24B, interest on housing loan is allowed as deduction. Interest on loan taken to repay original loan is not allowed as deduction. Okay, we should keep that in mind. The interest on loan allowed as deduction is only for the purpose of purchase, construction, or innovations or repair. If the loan is taken to repay original loan, the interest on the additional loan taken will not be allowed as deduction. Next point, interest on delayed payment of interest is not allowed as deduction. If there is any delayed payment of interest, the interest on this delayed payment of interest will be not allowed as deduction. When interest is payable outside India, deduction is allowed only if tax is deducted at source. However, TDS is not necessary if there is any person in India who may be treated as an agent of the lender. Okay, in this case, if the interest is payable outside India, deduction is allowed only if there is TDS. However, if there is any agent of the lender in India, TDS is not necessary. Loan taken to repay outstanding interest on all house loan is not allowed as deduction. The interest on loan which is taken to repay all interest of pending house loans will not be allowed as deduction. More important points to keep in mind. Interest on loan shall be allowed as deduction out of the net annual value of the house for which the loan has been taken. Okay, the interest on loan will be allowed as deduction out of the net annual value of the house for which the loan has been taken. We have to keep that in mind. This is important. Even if the net annual value of self-occupied house is taken as nil, deduction is allowed which may result as loss under the head house property. Okay, which in this case, if the NAV of self-occupied house is taken as nil, usually the NAV is nil for self-occupied house. Even if it is nil, deductions are still allowed. In this case, there will be a negative value which will be treated as a loss under the head house property. Okay, this loss can be set off against other incomes of current previous year. The treatment of unrealized rent which have been recovered. If during the previous years there has been any unrealized rent and this unrealized rent has been recovered in the current year, how will this unrealized rent be treated? Okay, this unrealized rent will be treated as an income on that current year. Okay, however, 30% of this unrealized rent recovered will be allowed as deduction. This is also to be kept in mind. Now we go on to the problems. Problem number 1. Mr. Anil built a residential house at Hyderabad, and for the completion of the house, he took a loan of rupees 20 lakh from a bank as under. Okay, on the 1st of May 2010, he took a loan of rupees 8 lakh at 10% interest. On the 1st of November 2011, he took another loan of rupees 8 lakh for 9% interest. And on the 1st of January 2013, he took another loan of rupees 4 lakh at 8% interest. The house was completed in October 2013, and since then it is occupied for the residential purposes of his family. They repaid rupees 4 lakh to the bank on 1st December 2016, and bank adjusted this amount against the loan of 2010. In this problem, Mr. Anil took 3 loans for construction of a residential house. Okay, the construction was completed in October 2013, so the pre-construction period will end on the 31st of March immediately preceding October 2013, that is 31st March 2013. We have to find out the amount of deduction admissible or allowed under section 24 and the net annual value of the self-occupied house for the previous year 2016-17. These are your working notes. Okay, here pre-construction period on the first loan. The first loan was taken on the 1st of May 2010. Okay, since the house was completed in October 2013, this period will go up to the 31st of March 2013. Pre-construction interest for the first loan. The loan is rupees 8 lakh paid at 10% per annum. Okay, this comes to 35 months. 2 years and 11 months comes to 35 months. So 8 lakh into 10% into 35 by 12, we get 2,33,333. This is your pre-construction interest on the first loan. Pre-construction interest for the second loan. The second loan was taken on the 1st of November 2011, okay, till the date of completion, which is 31st March 2013. This will come to 1 year 5 months, okay, a total number of 17 months. So 8 lakh into 9% into 17 by 12, you'll get 1 lakh 2,000. Pre-construction interest on the third loan, which was taken on the 1st of January 2013, this will end on 31st of March 2013, a total period of 3 months. So 4 lakh is the amount taken for 8% for 3 months period, which will come to 8,000. So the total pre-construction period interest will be 3,43,333. Interest for the current year 2016-17. This is also part of your working notes. Okay, on rupees, we should remember that the assessee repaid rupees 4 lakh in the current year or previous year 2016-17 for the loan that was taken on 1st May 2010. So on rupees 4 lakh, that is 10% for full year, the interest comes to 40,000. Okay, for another 4 lakh for 10% for 8 months, since the loan was repaid on 31st of November 2016, the total interest will be taken only for 8 months, which comes to 26,667. Okay, I hope you can understand this part. This is the first 2 items is for the same loan. Okay, 4 lakh must be paid for full year and 4 lakh only for 8 months, because 4 lakh has been repaid on the 31st of November 2016. That is why this amount is taken. Okay, the second loan, that is 8 lakh for 9%, 72,000, and the third loan 4 lakh at the rate of 8%, 32,000. So the total interest for the current year 2016-17 is rupees 1,70,667. Computation of NAV of self-occupied house. The NAV of self-occupied house will be nil, but deductions are allowed. If you remember the important points, even though the NAV is nil, deductions are allowed. Deductions under section 24. Interest for current year 2016-17 will come to 1,70,667 as calculated, and 1/5 of your pre-construction period interest, which comes to 68,667. So total interest is 2,39,334. If you remember in the conditions, this deduction for self-occupied house has to be restricted to rupees 2 lakh. So loss from self-occupied house will be rupees 2 lakh. It cannot go beyond rupees 2 lakh. So we will take the value 2 lakh instead. I hope that's clear. If property is owned by co-owners, that means a single property has multiple owners, how will we treat them? Income is calculated as one house. The income for the house property will be calculated as 1, and this income will be divided among the owner later on. Second problem. Here, A, B and C are 3 friends owning equally a house property consisting of 6 identical units. It was constructed on 1st July 2013. One unit is self-occupied by each one of them for their residence. The remaining 3 units are let out on a monthly rent of rupees 7,500 per unit. The municipal value of the house property is rupees 5 lakh and municipal tax is rupees 1,25,000. Okay, in brackets 25,000 due. The other expenses were as follows: collection and repair charges 7,500, insurance premium rupees 15,000, interest on loan taken for construction of house 1,62,500. Here a single house has 3 owners, that is A, B and C, and this house can be divided into 6 units. Okay, 3 units is self-occupied by each one of them and the remaining 3 is let out. You should keep that in mind. One of the let out units remained vacant for 2 months. Mr. B could not occupy his unit as he was transferred to some other city. Okay, this will not count. This statement here will not count. He does not own any other house property. Compute the taxable income under the head income from house property for assessment year 2017-18. That means for the previous year 2016-17. So this is how we'll compute the income from house property. Let out 3 units, that means 50% of the property is let out. Okay, so MRV of the 3 units, that is 50% of 5 lakh, will come to 2,50,000. Actual rent for 3 units. Okay, since 3 units are let out, so the actual rent will be taken for the 3 units 7,500 for 3 units into 12 months, 2,70,000. Whichever is higher is your will be taken. Here we will deduct the loss due to vacancy as given the question. 1 unit was vacant for 2 months, so loss due to vacancy is 15,000, and we'll get your annual rental value, okay, after deducting the loss due to vacancy, which is 2,55,000. Municipal taxes actually paid. The total municipal taxes as given in the question was 1,25,000, but only 1 lakh was paid. Since 25,000 is still due, only 1 lakh is paid. So we will deduct only the taxes which has been actually paid. 1,25,000 minus 25,000 into 1/2 or half, since we are calculating only for 3 units, that is 50% of the property, comes to 50,000. So your NAV will be 2,05,000. Deduction under section 24. Okay, if you remember, standard deduction allowed under section under section 24A, standard deduction of 30% on NAV is allowed irrespective of whether the owner has paid any expenses or not. Standard deduction will be allowed. 30% on your NAV. 30% on NAV, that is on 2,50,000, will come to 61,500. Okay, and your interest on loan is also allowed as deduction. The interest on loan is 1,62,500, but we are taking only for 50% of the property. So 50% of 1,62,500 will come to 81,250. So income from let out property after deducting the deduction under section 24, it will come to 62,250. I hope that's clear. Income from house property. Here there are 3 self-occupied units, A, B and C. Okay, 3 self-occupied units, A, B and C. So the annual value for self-occupied units will be taken as nil. Deduction under section 24. Interest on loan, that is 81,250, will be divided among the 3 units. Okay, this deduction will be allowed even if the NAV is nil, which will come to 27,083 each. Share of income from let out property. This is the income from let out property. Total of 62,250 will be shared separately among A, B and C, which will come to 20,750 each. Therefore, after deducting, you will get a loss from house property, of 6,363. So A, B and C incur a loss from house property at rupees 6,333. Problem 3, another comprehensive problem for you to understand better how to solve these problems on income from house property. Here, Mr. A is the owner of a house which consists of 3 independent units. Ground floor, which is equal to 40%, is self-occupied, and first floor, which is also equal to 40%, is let out. Second floor, which is equal to 20%, is also let out. Here, A has a house which consists of 3 independent units. The ground floor is 40% of the entire building, is self-occupied. The first floor, which is again 40% of the entire building, is let out. And the second floor, which is 20%, is also let out. Okay, these are the other information. Here the FRV is given, municipal valuation or your MRV, standard rent is also given, municipal taxes will be 10% of MRV, repair expenses, ground rent, actual rent received. Here the first floor, the actual rent is rupees 5,000 per month. The second floor, the actual rent is rupees 2,000 per month. These are other conditions. First floor remained vacant for 2 months. That means there is vacancy for 2 months. Mr. A started the construction of the house in 2013. He borrowed rupees 5 lakh at 14% on the 1st of July 2013 for the completion of the house, and the house was fully completed on 15 July 2015. Mr. A returned a loan of rupees 1 lakh on 31st March 2016. Determine his income from house property for the assessment year 2017-18. These are your working notes. We will first find out the pre-construction period. Okay, the date of borrowing is on 1st July 2013. Okay, date of completion is 15 July 2015. So the pre-construction period will be taken from the date of borrowing to the 31st of March 2015, which is the 31st March immediately preceding 15 July 2015. This will come to 1 year 9 months, total of 21 months. So your pre-construction interest will be 1/5 of 14% of 5 lakh into 21 by 12. This will come to rupees 24,500. The house is divided into 3 units of 40%, 40% and 20% respectively. That is, they will be divided in the ratio 2:2:1. Okay, so this is how you compute the income from house property. Okay, so we have 3 amount column, okay, for each unit and particulars. Under the particulars, we will first find out your ARV. So the regular method which we used to take, first we take FRV and MRV, we compare whichever is higher, we will take that, compare with standard rent of 80,000, whichever is less will be your ERV. So your ERV is 80,000. The ERV will be divided in the ratio 2:1 for each unit of the building, which will come to 32,000 for the first unit, 32,000 for the second unit, and 16,000 for the third unit. And we compare your ERV with actual rent. The first unit is self-occupied, so there is no actual rent, so there is dash there. The second unit, the house is let out for 5,000 per month, which comes to rupees 60,000 for the year, and 24,000 for your third unit, which is let out for 2,000 per month. Whichever is higher will be your ARV. Okay, so we take whichever is higher. For the first unit, we need not take because your NAV will be nil. For self-occupied will be nil. So for the second unit, we take 60,000, which is higher, and the third unit we take 24,000, which is higher. From here, we deduct the loss due to vacancy. Okay, we have vacancy of 2 months for the second unit. The total vacancy is loss due to vacancy is 10,000. We deduct from the second unit, and you will get your gross annual value. Gross annual value of unit 1 will be nil. Unit 2 after deducting will be 50,000. Unit 3 will be 24,000. From your gross annual value, what do we deduct? We deduct your municipal taxes. Okay, municipal taxes as given the question is 10% of our MRV. This total amount will be divided in the ratio 2:2:1. Okay, no deduction will be necessary for your unit 1. Only deduction under section 24 will be allowed for unit 1 since it is self-occupied. Keep that in mind. So deduction for unit 2 will be 4,000. Deduction for unit 3 will be 2,000. Remember, municipal taxes is 10% of MRV, which will come to rupees 10,000, and this will be divided in the ratio 2:1 for unit 1, unit 2 and unit 3 respectively. So your NAV for unit 1 will be nil, for unit 2 will be 46,000, and unit 3 22,000 after deducting the municipal taxes. Now we go for deductions under section 24. The first deduction is your standard deduction, which is 30% of NAV. Here, first unit, there will be a dash, no deduction. Second unit will be 13,800, 30%, which is the 30% of 46,000. And unit 3, 6,600, which is 30% of 22,000. Okay, deduction for your interest on loan for the year 2016-17. Here rupees 5 lakh has been paid, so the whole loan will be reduced by rupees 1 lakh, sorry, rupees 1 lakh has been paid, so the whole loan will be reduced by rupees 1 lakh. So 5 lakh minus 1 lakh into 14%, okay, and this will be divided in the ratio 2:1, which we will get 22,400 for unit 1, 22,400 for unit 2, and 11,200 for unit 3. Okay, the third part is 1/5 of pre-construction interest. Pre-construction interest, 1/5 of pre-construction interest is rupees 24,500. This will also be divided in the ratio 2:1. That is 9,800. I think there's some mistake here. It won't be 9,800. It'll be at a lesser amount, 4,400, something that like that. Okay, just find out the actual amount by yourself. So after the deduction, we get income from loss from unit 1 is 32,200. Unit 2, there is no income or loss since it is nil. Unit 3, after deducting all these, we get a loss of rupees 700. Okay, this one here is not 9,800, it is at a lesser amount. You can find out the amount. I made some mistake there. So the loss under the head house property for unit 1, we have a loss of 32,200. Unit 2 is nil. Unit 3 is there is a loss of rupees 700. So the total loss will come to 32,900. Okay, the total loss will come to 32,900, not 200. I hope that's clear, and I hope if there are any doubts, you will come up and ask. I hope you are serious since your exams is near. So that's all for your topic, income from house property. Thank you.